Hello and good morning, ladies and gentlemen. Here with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting with North American markets. Yesterday, the Dow went up a little bit, 23 points up. NASDAQ as well, 47 points up yesterday. The Dixie Index is up to 95.50 from 95.23. Retail sales month on month, excluding autos, worse than expected by 0.1%. Industrial production month on month, 0.2 worse than expected, and capacity utilization 0.2% worse than expected. Most data was ignored, as most movements were adjustments for tomorrow's interest rate decision. Short-term Treasury yields jumped to highest level in 4 years yesterday, which is a pretty good note there. Experienced traders should read that data. CPI indexes year on year, today, month on month as well. And also the housing market index is scheduled for today. Tomorrow, interest rate decision from the Fed and the monetary policy statement are in the agenda. European markets. Yesterday, European equity futures rose with the region's stock market set to be buoyed by gains overnight on US and Asian markets, although investors were expected to refrain from buying up big positions before US Federal Reserve meeting. Futures on the Eurozone's blue chip Euro stocks 50 index and on Germany's DAX advanced by 0.3%, while futures on Britain's FTSE 100 and on France CAC 40 rose as well. In numbers, the DAX 30 did 60 points and the French CAC 40 60 points up yesterday. European trade balance came out better than expected. The sentiment, this EU economic sentiment came a little bit worse. Employment change year on year and quarter on quarter 0.8%, 0.3%. The German EU economic sentiment 12.1 versus 25 points previously. Tomorrow we have the SNB interest rate decision and press conference. The UK markets today already we saw the unemployment numbers, which came better than the previous and the expected. The wages reports also shown green numbers as well. The sterling is on the rise, along with the FTSE 100, which ended with a positive 120 points yesterday. Asian Pacific markets, the Nikkei 225 did 500 points range, 160 points up yesterday. The BOG monthly survey, exports are expected to remain more or less flat for the time being, but after that they are likely to increase moderately as emerging economies move out of their deceleration phase. As for the domestic demand, public investment is expected to continue its moderate declining trend, albeit maintaining a somewhat high level. Today, we have the imports, exports year on year for the month of August. We also have the merchandise trade balance and the adjusted merchandise trade balance reports. We also have the foreign bond and foreign stocks investment reports, all today. Yesterday for the Pacific markets, the Governor DeBell focused on the bond market liquidity, long-term yields, and China's exchange rate. All three issues are important to financial markets in Australia. They are currently quite interrelated with the rundown in China's foreign exchange reserves, probably in part of comparison sales of US Treasuries and other sovereign bonds because of their greater liquidity, thereby affecting global long-term yields. On bond market liquidity, the decline in part, of course, a desired outcome of regulation. Whether it has fallen too far, it can be debated though. Further, the situation isn't going to change anytime soon. Whether the changed market environment is more conducive, I should say, to temporary crashes or permanent dislocations remains to be seen. All three of these issues are going to be with us for a while, so it is important we adjust to the current environment rather than wish it was something else. The Australian dollar dropped after the nation's central bank said China's slowdown and market volatility increased risk to global growth. The warning brought an end to the Aussie 6-day run of gains, the longest for almost 2 years, by the way. The Australian dollar has dropped 13% against its US counterpart in this year, 2015. Today, we have the New Zealand GDP numbers, quarter-on-quarter, year-on-year, and also tomorrow we have Glenn Stevens' speech for the Aussies. Commodities market, S&P 500 index had a range of 40 points yesterday, currently circling around 1980 mark. Crude oil stocks change. Crude oil futures rose after industry group of the American Petroleum Institute reported a 3.1 million barrel crude drawdown last week versus analyst expectations for a build. A surge in the American gasoline prices was also supportive. Tomorrow, we have the natural gas storage change coming out. Crude below $50 throws East Africa's oil production into doubt. Kenya and Uganda ended months of debate in August to sign an agreement on an oil pipeline costing almost $4 billion. Finding the money to build it and companies to start pumping crude might be a little bit tough task for them. Anyway, those were all major events for the day. I wish you a successful trading day. Cheers. Bye-bye.